Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Update for Tuesday, April 5th, 2022. We hope your week is off to a great start. We're back to update you on the markets and the economy. We've had a lot of action just in the 2 days so far this week. So let's get down to it and tell you about what we see happening in this market. A down day for the markets here today after a nice rally yesterday. Major averages closing the day. Dow Jones down 280 points. The S&P off by 57.5 points. And the NASDAQ down by 328 points. Again, coming off the backs of a big rally yesterday. We're seeing a down day today. So what gives, right? What's causing the action? What's pushing markets in both directions? And quite frankly, we just see a market that has come a long way in a short period of time. And it's due for a little bit of a pause, a little consolidation, and a little bit of a recharge. But naturally, right? Media, financial media, we need a narrative, we need a culprit, we need somebody to point the blame at. So who gets the blame today? The Federal Reserve Board of Governors, right? They're back out on the speaking circuit again, yet again today. I mean, have you ever seen a group of people that loves to see themselves, or I should say, hear themselves speak as much as the Federal Reserve Board of Governors? I'm not really sure. These must have been the kids, back in the days in high school and elementary school that nobody played with at recess. I'm really not sure why these folks need the spotlight on them 24/7, 365. But nonetheless, part of Fed policy tools is what we call jawboning, right? Talking policy into the market. They certainly did plenty of that over the last 6 months. And yet today we get three more of them to trot out and to give these high-priced and fancy speaking engagements where they tell us and they opine on all the things monetary policy. So the message today from the Fed really wasn't anything different than what we've heard over the last 6 months, right? However, this is a group of people that brought you, quote, inflation is transitory until they did an about face and said, whoops, it's not. So naturally, people are a little bit unnerved by, is the Fed as stable as we think they are? Do they really have their arms wrapped around the situation as much as we would hope? Now, again, we don't put much to the comments made today. They really just reiterated what they've been saying. We can't let inflation get out of control. We'll do whatever we have to do to get inflation under control. If we have to raise rates quicker, we will, right? So Jay Powell's been saying that for 6 months. The market takes from it what it wants. So again, we don't see today's sell-off being caused by Fed speak, but everybody needs a culprit, everybody needs a villain, and for today, at least for today only, these three Fed governors will be the villains. But really what's going on, folks, what's actually happening is the market is working through a very critical level, right? We spoke about this numerous times in previous videos. There is an important psychological level for all the major market indexes, but looking right here at the NASDAQ, there is a very important psychological level at the 14,500 mark. But Mike, why is that so important? Well, folks, it is important. Let me zoom in. Because the last two times that the market approached 14,500, which is this very dark line going horizontally across your screen here, the last two times we approached this price level, markets could not get through it. They couldn't generate the momentum they needed, and the markets rolled over and retested and made new lows. Now, we're back for a third time. Now, if you are familiar with these types of moves in markets, we've spoken about them over the years. Anytime there's a psychological level involved, the market usually takes a couple cracks to get through it, right? So the first failure, the second failure, right? People don't like to see that, but we anticipated there was going to be a third attempt, right? Maybe third time's the charm. Time will tell. But what we have here is an improving scenario, right? The market was able, let's zoom this in a little bit. The market was able to get above this 14,500 level, right? Which was unable to do a month and 2 months ago. However, we weren't able to stay there. Now, I did mention this. The first day we moved above this was a day that we produced a video, and I did mention to you that being above it is great, but we need to stay above it. And a little bit of back testing is okay. So that is exactly what we've seen. Let me see if I could zoom this in a little bit more for you, right? So again, we made the initial move above 14,500. We got to about 14,630, and we pulled back, right? We pulled back to about 14,140. Then we made another run at it. This was yesterday's activity, right? We pushed back above that critical level. We closed at 14,536. And here we come today, right? We're back below that level. Now, we'll see where we go tomorrow, but right now, we're a little bit above the previous retest, which is good. So let's go back to it. Again, this is what markets do at psychological levels. They have a way of probing around these levels. This is all right. If we do a little bit over and above, down and below, a little back and forth, this is what consolidation looks like in the market, right? You have a very powerful move off the low. We're going to do a little consolidating, a little sideways movements, a little back test, and then we believe markets will resolve themselves higher from here. So again, I don't make a lot of this Fed speak nonsense. Again, they've been saying the same thing, right? Markets are not surprised by this. We're pricing in, the market that is, 7 to 8 interest rate hikes. So why should a Fed governor making comments about interest rate hikes when we've only had one interest rate hike? Why should that spook the markets? And I really don't think it did. I think you're just seeing a market that's a little tired. It's come a long way. And naturally, right, buyers are reassessing. They're kind of recalibrating. And we're going to see where the next bit of momentum is going to come from. Let's take a look at the heat map today, right? Our market heat map looking under the surface. Again, you saw the markets down 1% plus across the board. So you would expect to see a lot of red in our heat map today. In my opinion, the heat map actually looks a little bit more favorable than you might anticipate, right? We are seeing certain sectors that were higher today. More of a defensive market today, right? So when we look at the last week in the market, we've seen a lot of green concentrated in our growth names, in our tech names, in our information technology, cybersecurity, etc. Now, when we look at today, a little bit more of a defensive market, right? All the tech stuff is down, and we're seeing rallies in the healthcare, consumer defensive, real estate, utilities, etc., right? Areas that are sensitive to interest rates that want to see rates on the move. So, nonetheless, nothing has changed, folks. I know I've said it over the last 3 or 4 videos. We have really good constructive action in the market, right? We've moved off the low. We're doing a little consolidation here. That's quite all right. We believe the market will resolve itself to the upside. It happens to be that April is a very seasonally positive month. So again, we're not going to just invest based on seasonal trends, but when we see a market that's taking shape in a way that we like, coupled with seasonal trends, we think that is a good combination for markets and therefore for investors. So if you have any questions, of course, reach out to us. Really enjoy all the conversations that we've had over really the last couple of weeks and months, talking to a lot of you about the different ins and outs of the markets and our strategy and how we see this playing out. So again, any questions, reach out to us. Always here for you. See you back later this week, not next week, but later this week on Friday with the Heritage Market Pulse. Have a great day.